Welcome to an update of the Federal Milk Marketing Order 33. This is Dr. Jones with FARME Institute, and I would really like to thank Nobis Agri Science for sponsoring this program, which I'm recording on August the 25th. In my last program, I showed you how milk prices have kind of increased and then stabilized, but since that time, they have really kind of taken off again. And so we just kind of look at what's going on to drive this most recent price increase. Let's start with the global dairy trade, which gives us an idea of what's going on internationally. And this was up 5.5%, so that's very good news. But when we look at it compared to our spot prices, it says that we're probably not going to be exporting a lot of material, even though we had this big increase. You take butter, for example, is at $2.98 on the world market. It's $3.13 on the spot market. That's not very good for exports. Cheddar's $1.94, blocks are 204. That's not going to work. And non-fat dry milk, which is one of the ones that's been very interesting because our spot has really taken off relative to the international price, and we'll look at that, but that also doesn't give us much exports. It says that the world price is around $15.81 with that whole milk powder, but again, it's just not high enough for us to be able to export. And we can see this if we look at the global dairy trade cheese price in green and then our national dairy sales report, which is the USDA. We had 4 months of really good exports, but now we're kind of coming out of that where we're $1.97 on the July price and then the world price about $1.94. Let's turn to the U.S. Market. Let's look at cow numbers. For the last year, we've reduced 43,000 cows. So we're down to 9,325,000. So we've really come off of this, high that was at 9.5 million. And we're basically bumping these numbers that we had in the end of 2019 when we had good milk prices. But the one thing that we can calculate from this once we get the slaughter numbers with the cow numbers is how many replacements are likely out there. And all I'm doing is just saying, how many did we call? How big did the herd change? Right now, I'm coming up with an estimate about 0.71, which is very low compared to where we've been. Historically, you go back several years, we were 1-to-1, and then we went to about 0.8-to-1. And so now we're down to 0.71. So that says our total replacement rate is around 35%. That includes dead. So it says your calling rate is probably going to be in the high 20s with a 7 or 8% death rate. Here are our slaughter numbers for the last year. We've basically called 7,000 more animals a week than we did a year before that. And you can just see where we've significantly reduced these calling numbers. This is last year, this is the year before. And so we should have actually increased the herd by like 370,000 because we called so many fewer if we had enough replacements, but we actually decreased the herd by 40,000. So that's how big this shortage of replacements is. We look at total output of milk on a daily basis for the industry. My program actually broke this at 2022 because we've been significantly coming up, and then now we're on kind of a downward trend. I'm not going to look at these green dots at this point. That's the seasonal adjusted numbers, but that's only based on the last 3 years, so there's a lot of variability with that, but we're definitely on a downward trend on daily production. And if we look at milk per cow, we're basically the same thing. It broke here in 2022. We've had a significant up, and then we've really flattened out since that point. Now, we've done that in kind of response to wanting more components, and this is the fat percentages. This is from the Ag Prices report, and this last report was very strong. The fat test is up significantly from that trend line. So when you kind of stand back and look at, what's going on in the industry now, we don't have the July dairy products report yet, so we can't actually calculate this for the most recent month, but this is for June. And if we look at the cheese demand, and that's up here, that's 39,106,000 pounds a day. The June production was only 38,712,000, so we were short on cheese production, and you can see that with this blue line being above the black line. And what this kind of calculates is if we're going to meet the overall demand, we need about 9.4 million cows, and here we are at 9.32. So we are really short on cow numbers if we're going to keep this demand as it has been for the last 12 months. Now, there is nothing like high prices to cure high prices, so we have to keep that in mind here. My best guess is that the July disappearance, which we'll be able to figure that out as we get the egg prices, is probably less than June. And that's because we've probably taken less cheese out of cold storage, kind of as a percentage than we expected to. Because here's the cheese stock. So again, split in 2022, these rose up significantly, and then it's slowly coming down, and this curve is kind of flattening out a little bit here, and that's why I think demand is probably softening a little bit. American cheese is 56% of the total, and this is the one that actually drives our prices because it's all based on cheddar. And so we're having this significant downturn, but if we look back in history, we had another downturn in that 2017, 2018, 2019 time period where we pulled a lot of cheese out. So one of the things I wanted to look at is, what happened to prices during these two periods. So back in 2017, you were $1.54 and then $1.49 in 2018. And then when we were pulling it out significantly, $1.82. And that's how you expect this to happen, is we put it in at a lower price and we pull it out at a higher price. Now, that didn't work out quite so good over here because we're putting it in at a higher price, but this was a time, if you remember, we were worried about inflation, we were worried about a war in Ukraine, and so that is kind of what happened. Everybody threw cheese into cold storage thinking that we're going to have, all this upward pressure, but in fact we didn't, and so they started pulling it out a little bit at 149, but now that we're at $1.97, it makes a lot of sense to try to get some of this cheese out of cold storage. Now, butter stocks have reacted a little bit differently. We had a significant uptick until about 2022, and then butter stocks really dropped in that year, and then now we've beginning to increase again. So this is the state of the market as I see it at the moment. Replacements are really short, and I think that's the thing that's really driving everything. There's a narrative that it's all about bird flu, and I think that's just bogus at this point because I can't see it in the graphs. Not that bird flu wasn't significant, but it didn't seem to have that significant impact on daily production. I don't see cow numbers growing. Milk per cow has actually trended down in favor of components, and components have continued to increase. And so one of the issues that we need to think about is where I say we need 9.4 million cows. If that milk has got significantly higher fat and protein, that might be 9.35. So we may not be quite as short on cow numbers as the data would suggest. Disappearance is good, but may have peaked with export headwinds. Right now, with the U.S. prices being higher than the world prices, it's going to be hard to export here. And we've been exporting like 20 million pounds of cheese extra for the last couple months, and so if we pull that back, that does have kind of an impact. One of the things that we were all worried about this summer was that extra processing capacity, because that is gearing up, but I don't see it coming online quite yet. The data in the federal milk marketing would suggest that we've not increased cheese capacity at this point, but it's starting to look like it's going to come online here soon. So we did finish up the July contracts, and I always like to look at how that changed over the last 6 months, and that the increase, which if we look at our carry in the market, this was a big bear market here, and then now we've kind of popped out into what I would call a bull market. And this is going to stabilize here as these prices become, I think a $2 a pound for cheese is the norm as opposed to where we were at $1.80 before. But also the question is how violently does it kind of come into this glide path? You can see this was fairly significant here. So right now, we're looking like we've kind of come back into normalcy, but I think September is actually going to be up a little bit given some of the price action we've seen here recently. Now we'll turn to actually order 33. Your statistical uniform prices were 21.21, and that was up 38 cents. And there's been very few times when we've been higher than that, so those would be historically pretty good prices. You are significantly depooling. Depooled a little bit less this last month, and depooling always lowers the milk price that you receive from your handler. Now, why did we depool? That's because class 3 was significantly lower than class 4, so they take the higher one, the 21.31, and take that out of the pool. And again, overall for the federal order, it doesn't change prices too much when you get into the depooling checks, but the co-ops that depool make more money than the co-ops that don't. Just talk about depooling. It looks like for September and October, it's going to be a little bit less depooling because, the price difference is going to be less than 75 cents. But this also comes up with another argument. When we have these kind of big numbers difference here, we tend to get a big PPD. And so your PPDs are probably going to be fairly small here for the next couple months until class 3 falls off from class 4. This is what it looks like for the rest of the year. We should be about $1.94 over last year. And this is an interesting graph to talk about because there are two narratives that are being played out in the industry right now. First one kind of being led by Sean Hackett, who says, hey, we're in a recession. These prices are going to drop. You need to have all this milk kind of locked up for the rest of the year. The other one's being led by StoneX, which is saying we've been pulling cheese down so strong that we're going to end up with $2.20 blocks, and this is just going to go skyrocketing up. So it's going to be hard to kind of figure out what's going to happen this next 3 months, but just hold on to your seat because it could move in either direction at this point. Fat percentages came up about 10 ticks. We're just continuing to get more fat in these milk, and order 33 is a good example of that. Interesting, protein actually came up about 4 ticks. That's been fairly stable here, but it does look like that it's increasing a little bit. This graph is the National Dairy Sales Report on a weekly basis, which is what actually controls your milk price, and the orange line is the one that we're most interested in. So this has been very stable and actually trending up just a little bit, and the reason I look at this is, historically we tend to have these rises and then fall back off, and so right now we're out of that tendency. And so have we just kind of set a new paradigm here, or is this going to trail back off? I'm not in the camp of saying it's going to trail off significantly, because again, I think $2 cheese has become the new normal. So here are our spot cheese prices. We kind of built this support level in here at the mid 180s. And then we were kind of bouncing around to this resistance, which was coming down and then looked like it was coming up, and then boom, this thing just kind of took off for a little bit. And so the question right now is, it's come down on Thursday and Friday of last week. Is that a correction or is that a reversal? And again, we'll see more of this next week, but I suspect it's more of this kind of correction as opposed to coming back down here to $1.60 or $1.70, something like that. That would be I think way out of line. And if we just simply look at the last 2.5 weeks and these barrels in green, we came down on Friday, but we're about where we were a week ago Tuesday, so that has not fallen off. $1.95 would be, if we break that level, then that's going to be kind of falling off. And if we look at the blocks, the same thing, we're right back to where we were about last week. So again, I think this is more a correction than a reversal. And the only other thing I would add to that, and this is getting into the weeds a little bit, this is as of Friday on the spot market. We did get a bid on barrels that had fallen at 12 cents, which looked like it was a free fall, but we finally did get a 209 bid. So hopefully then we open up the spot market today, we're going to start seeing a little bit of buyers back in. And part of that is the spot milk price is very strong, and so I would suggest that milk is relatively short. And on Friday, when we had this big downturn in the spot market, the futures market actually did not drop with it. So it just kind of bopped in here and said, no, we're gonna hold up here because we don't think this fall on the spot market is real. Whey prices have been in a fairly narrow range here, but they're starting back up, and sometimes people consider whey to be a leading indicator, so that would suggest that prices are coming up. Very few trades, so this is very high volatility, but that is coming up a little bit. Butter prices are in very small range, and I would call it 312 to 319. And if we look at what's going on with the cream multiples, they're about 1.45, so they're not significantly high, but they're higher than they were. So butter, I think, is going to be in that 3 to 310 range. And again, this is the indicator that the basis for spot milk loads in the upper Midwest are around 250. The one that's going crazy right now is non-fat dry milk, because again, if you look across the last year, there's very few times when it's above the global dairy trade, which is here in blue. And this has really become very strong here. I kind of figured it was a leading indicator, so see if this next auction comes up also, or does this simply say our domestic demand is very good? And you can see this on the last 2.5 weeks where this just, inched up. And we had some good trades on Wednesday and Thursday, 7 and 8 loads. So I think this is probably real. So overall, this is a picture of class 3. Last week it, came up about 3 cents, which is about nothing. Here's our cheese graph. It's at all these new highs, and it's going to trend off in the new year. Whey is fairly stable at around 55 cents, and butter has this characteristic falling off in the new year, but that didn't happen last year, so we'll see if this kind of straightens out here, but butter's at the highs that we've seen. Class 4 has highs out here, through the end of the year, and that's going to be driven by this non-fat dry milk, where butter's coming down a little bit, but it's also got, these new highs. All right, we'll turn to the other side of the equation, which is grains. Corn's about 144 a ton without basis for the next 12 months. Soybean meal is around 309. The price to feed the cows at 8 pounds of cornmeal, 8 pounds of soybean meal without basis is $1.81. That's about $1 a cow cheaper than it was a year ago. So if we look at the soybean meal, we thought booking bean meal at 340 was a good idea. Of course, now we're down here at 310, but there's starting to be a lot of interest again of trying to lock this up. I'm not sure if this is, going to come popping back up. There's some indications that it might, but I also can't guarantee you we're not at the, at the bottom at this point. So overall, order 33, looks pretty good on the drought monitor. It does look like a little bit of dryness in northern Indiana, northwestern Ohio, but nothing in the, the D1, D2 categories. And over the next few days, it's supposed to have, fairly normal precipitation. We've got a lot of lows up here that are spinning across Canada that are just bringing moisture into this area. And with that, it's driving this heat ridge to the southeast away from where it was last couple weeks, which was, up here in the Four Corner states and up through Montana. All right, that's my program for this month. And like I say, I think milk prices are probably going to be holding here, maybe headed up a little bit, but the headwinds of the election and recession and all these sorts of things has to be watched overall. All right, I'll get you another report next month.